what's up guys? In this video we're going to look at Fresenius Medical Care stock. We're going to look at their balance sheet, look at their profitability, expected growth and all of that. Ultimately we're going to use an intrinsic valuation model to try and figure out what the stock's worth today. If you're new to the channel, my name is Dan. I do a lot of stock analysis here. So if you're into that kind of thing, hit that subscribe button so you can see more videos like this one. Alright, let's jump into it. So here we are on Fresenius' website. They are a medical company here. They have dialysis machines. You can see one of their models right here. They also make the Nova Lung heart and lung therapy system. And they make this Crit Line 3 monitor here to monitor their dialysis treatment. They also have some drugs. They got Velphoro here. They've got this other drug here called Venofer. These are used for people with chronic kidney disease. Alright guys, so just about 80% of their revenue comes from services. The remaining roughly 20% is from products. They are pretty heavily concentrated in the North America region with 70% of their sales coming from there. But they have 11% from Asia Pacific and 15% from Europe, Middle East, and Africa. So here I'm looking at FMS's balance sheet. They have moderate leverage on the, somewhat low to moderate end there with these debt ratios here. The current ratio of 1.18, that means their current assets are 1.18 times their current liabilities, so they can cover their butt there. It's not amazing, but it's no issue there, no liquidity issue. Quick ratio just a tad under 1. Also, running a pretty tight ship, but no concern there either. Interest coverage ratio looks pretty low right now, 5.73. That means the earnings before interest and taxes is only 5.73 times the interest expense. Interest expense is eating up a pretty big portion of your profit there. So we're going to have to see if that's like a one-time thing or if like that is normal for the amount of money they make. They don't really have any cash and they're actually pretty long-term asset intensive. Most likely with patents and other intangible assets like that. So here I'm looking at their net income over time. One thing I said I would check on is whether their interest coverage ratio is driven by a bad year or something like that. That is not the case. They're making about the same amount of money they made the previous year. So their debt is a little concerning. Hope they can get a better interest rate there. But also interesting to note, other than 2018, pretty steady profits slowly increasing over time. Here are their margins over time. You got gross margin in blue, operating margin in red. Now, unfortunately, they're kind of trending downward, but not really sinking. I think they're probably going to be stabilizing around this range here, which is not a bad amount of profitability. Of course, we'd love to see it increase, but, not bad. When you look at the company's reinvestments, you kind of learn what kind of company it is. In green, you have net acquisitions. In red, you have R&D. And in blue, you have net capital expenditures. Now, given they are in the healthcare industry, I don't expect much blue here. Not much net capex going on. Just probably maintaining their facilities. That's what we see here. Kind of hovering around 0. But what's very interesting is that they have, a lot of acquisitions. Although they kind of had a divestiture there in 2018 there, negative net acquisition, but there are a lot of spikes here where you can see they are making acquisitions rather than R&D, which is actually quite low compared to the acquisitions. Here are revenue growth estimates for Fresenius going forward. Their growth is not bad, but nothing impressive here. Revenue is expected to remain about flat next year and then grow at about 5-6% for the next couple of years. dropping to about 4.5 after that. Here is the company's stock, currently trading at about $36.70 per share, giving it a market cap of about $21 billion. The dividend is 72 cents, making a yield 1.95% right now. And the PE ratio for the past 12 months is about 15.28. Here's kind of the 10-year path I see for FMS. I've taken those analyst estimates for revenue growth. I've plugged them in here. Then I have a stream of revenues. Now, to get from revenues to profits, I need to estimate a net income margin. They had about a 6.5% margin last year, but the 5-year average is about 8.3%. So we're going to go with that. So if we do that, we get a stream of net income. The final step, though, is taking that net income and subtracting reinvestment needs. Now, I'm assuming a pretty high reinvestment rate. I'm assuming the company, will have to make a lot of acquisitions as they have been doing. And so that gives me a stream of free cash flows to equity. And let's see what the company is worth given these cash flows. Alright guys, so I got my cash flows here from the previous spreadsheet. I have my terminal value, the cash flow in that year, divided by my discount rate minus my perpetual growth rate. I'll just figure on they can grow cash flows at 2% per year after the 10th year. If all of this is true and we're using a 7.5% discount rate, the company would be worth about $25 billion or close to $43 per share. Given the price today, that would make it about 17% undervalued. Now, it is worth noting this is all dependent upon the assumptions we make, one of which is your required rate of return. So suppose you wanted an 8% return here. Now it's only undervalued by about 7.5%. Suppose you want a 9% return. Well, if you want a 9% return, it's actually only worth about $34, making it overvalued by about 7.6% right now. So that is worth noting. But given their stability, I'm pretty comfortable with the 7.5% discount rate. Alright guys, here are my final thoughts on the stock of Fresenius. Overall, I like it. The balance sheet is not bad at all. The company is very stable. You look at their past 10 years of operating history. They make money every year, and it doesn't really bounce around too much. So, you know what you're going to get with this company. So, out of all the healthcare, out of all the medical stocks I've looked at, this is the only one that I think really has a stable path going forward, and I would be very comfortable to invest in. Now, I don't think some of the other stocks I've looked at, like Bristol Myers Squibb or Novartis, I don't think they're necessarily bad deals or anything. But for me, this one is the best so far. So if you're looking for a healthcare stock, at least for me, it's going to be this one. This is one that I'm going to invest in. But that's just me. Let me know what you're going to do in the comments below. Always like to hear from you. Thank you for watching.